technical glitch cripples trading in both the cash and F&O segments of the National Stock Exchange for nearly 3.5 hours. After 3 failed attempts, trading finally resumes amidst complaints over display issues and delayed rates. The National Stock Exchange says sorry, assures investors that the blackout is being examined by both its internal and external vendors, refers the matter to its Standing Committee on Technology. The Ministry of Finance seeks a report from the capital markets regulator SEBI on NSE's trading halt. SEBI says it is in touch with NSE officials and is closely monitoring the situation. The technical snag takes dealers by surprise. Chaos and confusion reign supreme on dealing floors. Brokers struggle to execute trades. ET now gets you a ground report. And despite the technical glitches, there's no stopping the market. The Nifty hits 97.18 today, led by short covering in technology and PSU banks. The Sensex soars a good 350 points as traders make fresh bets ahead of the corporate earnings season. Hello and welcome to this very special edition of our show. The NSE Blackout is what we're calling it, and that clearly aided to the Manic Monday today. The snag hit NSE. It was a technical snag that hit NSE. It took a good 3-hour glitch and 3-hour long time frame to finally, for them to get their act together, and finally we, saw trading resume.
The day when Nifty is at an all-time high, it also coincided with this entire technical glitch. Now, to be fair, it's a technical glitch. Exchanges have got stalled in the past, but the factors were different. Previously when exchanges have hit this trading halt, that's happened either because of fat finger or because of some margin calls or because of some unprecedented global event. So there is no risk to the system, there is no risk to the exchange, there is no cyber attack, there is no terrorist activity. But for the moment, this is we must assume that this is just a technical glitch, and the technical glitch has been sorted out. But from an exchange standpoint, this is bad PR for National Stock Exchange, and it is coming at a time when NSE was preparing for its IPO and when they're struggling with their entire issue of algorithm trade. But these problems have happened in the past to all global exchanges. At the end of the day, these are machines and systems can fail, even though NSE has some of the best systems in the world. Thankfully for us, whatever happened in National Stock Exchange was sorted out. The parallel trade was, trade was on in Bombay Stock Exchange, and if I look at the way how prices have settled, the price discovery was real, and despite this aberration, no large upheaval happened in the stock markets. Oh
yeah, indeed. And just to give you a dateline of how it all transpired, the pre-open trading was halted at 9 a.m., 9:45 a.m., then 10:45, and then 11 a.m. So NSE trading interrupted is what they're calling it, a technical glitch. Of course, we are yet to get a formal confirmation from NSE as to what exactly was the nature of this technical glitch. The format of the bid-ask rates was distorted when we came into trade. NSE finally resumed trading after a good 3-hour long hiatus at 12:30 p.m. There was, however, like Nikunj rightly pointed out, no interruption eventually in the BSE cash and derivative segment. NSE commanded almost 80% plus of equity cash and derivatives market as well. So all in all, this looks like a bad day in history. It all was smooth. We managed to close at a record finish for ourselves, well above the 97.50 mark. In fact, 97.80 is the high point of the day. Who knows? Tomorrow we may be celebrating the 9800 mark, and then today is going to just look like a bad page in history books. But let's analyze and take cognizance of today and take a 360-degree perspective. Our reporter as well as researcher team is here in full force to really analyze minute by minute as to what really transpired as NSE faced this massive technical glitch today. Vijay Iyer, Pooja Sarkar, Ruchi Bhatia, Mubina Kapasi and Ajay Sharma all join in. And as stock markets were in panic this morning after a technical snag disrupted NSE and threw it in a tizzy, we were really on top of the story all through the day. And we've been reporting from the NSE headquarters in Mumbai. In fact, Vijay Iyer, my colleague, joins in for a quick update from the National Stock Exchange and what he's been gathering on this technical snag. And Vijay, what does the NSE now have to say?
July 10th, the Monday, is one date which markets would like to forget at the earliest. Clearly, India's largest stock exchange, NSE, failed today when it opened in the morning, and clearly the F&O segment had to be halted for close to more than 3 hours. Finally at 12:30 a.m. is when the trading in F&O segment finally began. But clearly a lot of questions needs to be answered by NSE on how this technical glitch occurred, and clearly why they could not fall back on their disaster recovery site or the backup server that they have at a location in Chennai. Having said that, the whole objective of the regulator had to ensure that they coordinated with the exchanges, and clearly to ensure that at the end of the day, after markets were closed, the settlement happened swiftly and efficiently, because clearly that was the biggest challenge that SEBI wanted to ensure that NSE does efficiently with no glitches. Having said that, from NSE's perspective, clearly this could have not come at a worse time. Clearly there's no full-time MD and CEO at NSE. Also, they are already under investigation for the algo trading on the very issue of F&O trades. So clearly for NSE, this could have not come at a worse time. Having said that, now clearly market regulator SEBI will have to also take a call largely on the policy issue, because we all know when it comes to derivatives and F&O, clearly because of the legacy issues, majority of the trades happens in NSE. So that is one aspect that market regulator from a policy perspective will have to take a look at. From NSE's perspective, clearly there will have to be a lot of answers which they'll have to come across, not only to the market but particularly with market regulator SEBI. So clearly in the coming days and weeks, we could expect many issues that market regulator will deal with NSE to ensure this Maniac Monday doesn't get repeated in the Indian equity markets. From NSE, Vijay Ganeshan Iyer, ET Now, Mumbai.
Okay, Vijay, thanks a lot for that. Now, the Finance Ministry also has sought a proper report from markets regulator on what really went wrong. Why was there such a massive snag? And it took 3 hours, Ruchi, for them to fix it. So Ruchi has been speaking to her sources in the North Blocks, and she gets us more details.
While normal trading has resumed on NSE, Finance Ministry is definitely keeping a close watch on how the situation is going to develop. In fact, we do know is the fact that Finance Ministry has sought a report from market regulator SEBI and NSE on the same. This is not for the first time a technical glitch has happened, a data glitch has happened, but what we do know is the fact that Finance Ministry wants to ensure that this does not escalate into a bigger thing. In fact, market regulator SEBI is going to look at all the issues with respect to arbitrage, and Finance Ministry is keeping a close watch on it. In fact, we also do know that Finance Ministry believes this is worrisome if something bigger comes up, but so far only if it is only a software glitch, those are the kind of issues that can be dealt with. But for all the other related issues with respect to arbitrage, with respect to the difference that we are seeing and the volatility that we are seeing, all these issues will be sorted out by market regulator SEBI, and Finance Ministry will be in close touch with them.
Right. Okay, Ruchi, we'll leave it at that. In fact, as BSE volume spurt massively on the National Stock Exchange, the officials of NSE have sought a clarification from the Bombay Stock Exchange. Let's go across to Pooja Sarkar and check in on what she's been picking up from there. Pooja?
We're standing here at the BSE, that is Bombay Stock Exchange, and it is business as usual for BSE. But that wasn't really the case for NSE, which saw one of the worst trading halt it has seen in the longest time. In fact, SEBI is scanning the matter on what really went wrong. Although there's a very interesting thing that happened today in the morning is the fact that the BSE shares actually went up on the NSE platform, and NSE has now asked BSE to clarify what are the reasons for its share prices to go up on the exchange. Although this entire trading halt issue comes at a very wrong time for NSE, which is still grappling with the fact on how to bring about its IPO. This markets regulator had clearly said that they need to go out and refile the entire IPO issuance program for them, and also one of the reasons for this entire refiling of the IPO draft red herring prospectus is the entire algo issue that they have been facing with. Thus, this entire trading halt, although they are calling it a technical glitch, comes at a very wrong time and also puts a question mark on the risk management services that NSE has employed under its program. And thus, all in all, it has been a bad day for NSE, which is trying to still find out the answers. What are the reasons for the entire trading halt?
Thanks a lot for that. Now, there was a chaos at dealing rooms this morning with traders and jobbers. They were complaining that orders were not getting through. Mubina Kapasi joins us with details, and she was earlier at the Motilal Oswal dealing room in Mumbai, and she really got a sense on what the confusion was all about.
While trading has resumed very normally, what essentially dealers currently are complaining about the fact is the very violent moves that you are seeing on certain specific stock counters, primarily because liquidity now is very low. The retail investor does not want to invest currently, at least via the NSE. So this is something that's creating a lot of difference in the prices between NSE and BSE, which in turn is creating an arbitrage opportunity. So take a stock like TCS for that matter. Currently, the NSE volume is just at about north of 50,000, which is extremely low for a counter like TCS, and hence every little lot being purchased into the stock is something that's going to create a lot of movement either on the upside or the downside, of course, depending on which way the order is moving, and that's something that creates an arbitrage opportunity. Hence certain stock counters are seeing very volatile moves. That's what dealers are currently talking about. Most, of course, are staying away from trading on the NSE. That's clearly the buzz currently in the dealing rooms. Most want to stay away. Hence liquidity currently in most of the NSE counters is extremely low. But yes, one thing is for certain, that trading has resumed to normalcy, be it in the future segment or the cash segment. There was certain discrepancies in relation to the bid-ask trade when it comes to the cash segment, but I understand that as well has now been resolved and trading is resumed, of course, with low liquidity and low volumes.
Well, irrespective of all the mayhem that was playing out with the NSE blackout, markets managed to hit an all-time high even as the NSE struggled with this technical snag. And Ajay, walk us through how the market action was. 12:30 market opening for NSE, but it made up for all the lost time.
Well, that's correct. It more than made up for what happened. But today, the cheer on the street was very subdued. On an ordinary day, a lot of trading community participants would have cheered a lot. But today, all of that enthusiasm was missing, despite of the markets actually heading to fresh highs and almost a 100-point gain on the Nifty. That was because the participation was very low. In fact, the first half of the trading session, most of the traders and dealing room guys we spoke to said HNI institutions were sitting on the side. The moment they sensed there is technical issue, remember the institutional participation on NSE is very high, whereas HNI and retail trades on the BSE. So while there was some selective trade happening on BSE from the retail and HNI, institution was sitting on the side. The moment they sense that there is technical glitch, because they don't want their money to be stuck, it leads to litigation. And sometimes, if you heard, we've seen earlier times when fat fingers or earlier issues which have triggered that kind of a stoppage in the market. So that is why the reason was that almost 1/3 of daily volume has actually occurred. However, most of the trading guys and the institutionally spoke to believe that tomorrow onwards, the volume and turnover will come back to normalcy, and today's market was a one-off. However, they know that today's up move was on low volumes.
Okay, we'll leave it at that. In fact, Vijay, Pooja, Ruchi, Mubina and Ajay, thank you all of you for giving us the 360-degree perspective on how this technical snag on NSE played out. And even as speculations arise about the reason behind the glitch at NSE, the top boss, Ashok Chawla, said the snag is an unfortunate event. In an exclusive chat with us, Chawla said that the NSE team is currently looking at getting to normalcy at the earliest.
This is a technical glitch. We have kept SEBI informed. This is unfortunate, but it will be handled. At the moment, the important thing is to get back to work. This is something which the technical people are working on, so I'm not in a position to comment on it. Let's get back to work, and all these things will be addressed.
Okay, let's also hear it out. BSE CEO Ashish Chauhan and the former BSE CEO Rajnikant Patel on how soon they expect NSE to recover from the crisis and what could have really led to this snag today.
BSE basically has to remain open precisely for the reason that investors need to have the ability to see the continuous price formation happening in India as one of the most important asset markets, and also have an opportunity to trade in case they want to sort of make any decisions on trading. And earlier also, you might have recalled that when one exchange was closed, other exchanges were open. There are no regulations which say that one exchange has to close down when another exchange sort of has faced technical glitches. Of course, there are regulations which say that in case there is a panic in the market and market goes down by 10%, then you have to close all the markets for a particular time and then 15% particular time. But overall, it's not about the technical glitches, and rightfully, because you need to have investors having continuous price formation and also ability to trade. It's not an easy system to operate. When it works like magic. When it goes down, it's very difficult to pinpoint where things have gone wrong. And there are disaster recovery frameworks, there are other frameworks, but they need to kick in at some point in time. And again, the software has to also ensure that it has to work on both sides well. This is very, very complex. And Indian markets, Indian stock exchanges are among the top, what I call in terms of the infrastructure. So I would not like to hazard a guess as of now, but I know that NSE has people and also the procedures to come out of this quickly.
There have been some occasions in previous time where one of the, or sometimes both exchanges have gone through such technical disturbances. Probably this disruption of trading happens because either there is a trading server software or a hardware failure, or there is failure in a network connectivity. And if only a part of a network is working and other part is missing, then of course you create a disbalance of the same exchange accessibility. So it is it is prudent that the entire trading stops. Other than that, I would think it could be surely either a software or a hardware problem, because otherwise exchange systems are very robust in terms of going on a real-time basis.
As NSE cupped the bug and we had a blackout for a good 3 hours, finally it all resumed and it all got back to normal. And guess what? We managed to close at a record high for ourselves. We will discuss that and more in the markets as to how life was after those 3 hours of blackout, but after this very quick break.
All right, thanks for staying with us. Nifty touched an all-time high. No, that's not the big story. NSE had a blackout or a trading snack for 3 hours. That would be remembered as the ultimate news flow, at least for 10th of July. So Alok Churiwala joins us, Managing Director with Churiwala Securities, and then we've got Dina Mehta, Managing Director of Ashit C. Mehta Investment. Alok, Dina Ben, good evening. Thank you for joining us. Alok, what went wrong? We're simply trying to, scratch our heads and trying to understand that an exchange which is of the stature of NSE, which has multiple checks and balances, the trading was halted for 3 hours, and the only explanation which has come out is that, look guys, there was a technical snag and we are sorry.
So, well, it's been a red-letter day as far as markets have been concerned. On one hand, we've had markets closed at virtual all-time highs, and on the other day, this day has been marked by failure in one of the largest exchanges of the country. Now, what went wrong? I think to hair split whether it was a technical error, technical glitch, call it what you may, software failure, hardware failure, these kind of things can happen. But for the trader, for the investor, for the broker, what is important is the kind of communication that goes out from the exchange, the kind of proactiveness that the exchange shows. And I think that was clearly lacking, because yes, there were 2 failed attempts to restart the system. After the 2 failed attempts to restart the system, there was, I think, all the news channels announced that trading is going to be closed for the day at the NSE. But then soon thereafter, there was a U-turn and trading began once again. The systems took some time to stabilize, and of course, while all that was on, there was trading happening at the other exchange. That said, I think there are some fundamental issues that we need to grapple with, because while it was the NSE today, it could be any other exchange tomorrow. Like I said, technical glitches can happen, but what is it that we can do as a system? And that for me is more important, because I shudder to think what would have happened if this was the last day of the settlement, this was day of expiry. I think traders would tear their hair and, probably jump off of the nearest window, because, it can be disastrous if such an event happened on the last trading day. I think one of the possible solutions that we should look at, and I think it's time for the capital markets of the country to talk about, how our two clearing houses, they don't talk to each other. If the clearing houses ICCL and NSECL were if there was interoperability between the two, possibly a lot of grief and stress could be avoided, because in India, after having the two exchange system, we have a natural disaster recovery inbuilt, and we are lucky to have that. But here we have to deposit two clearing corporations that don't talk to each other.
Right.
Margins can't be transferred, positions can't be transferred, and if you have a position on one exchange, you can't square it up on the other. So I think going forward, these are questions that we need to have a long, hard look at and address them.
Right. Ravi, I'm just going to get back to you, and we will chat about all these other things as well, Alok. But Dina, I just wanted to get you in on the discussion as well. And what is it that you made at your end of the technology glitch that happened in the day, and then finally it took 3 hours for it to sort itself out? And then trading resumed eventually, with the markets actually closing at a virtual life high.
See, basically, I would say that there are technology systems, and the systems failing once in a while is not something which we can say should never happen. But what is disturbing is two things. One is that why did the disaster backup not work? That is what we need an answer to. Why? Because they have been for years, NSE has been testing the disaster backup at least on once or twice a month by running mock trading on Saturdays. So that is the first thing which bothers me. Second thing is that they have forcefully opened the market, and the market was showing the depth between the buy and sell transactions was very huge. Actually, it was not correctly showing the the touch line which was there, which was according to me a very, very dangerous thing, because the trade were getting executed at one rate, and the buy sell order book which was below the touch line was showing huge variance. So I think in such circumstances, starting the market, we should not have any litigations or anything, because of what has happened. So that is a major worry for us as to why the market was started, though the system was not correctly in place.
Okay, Alok, what should be the next port of call now for traders who, let's say, wanted to exit or cover the short positions because the F&O market was shut now? They were not able to perhaps capture that Nifty upside, or they were not able to protect the stop losses. There is an NSE Investor Protection Fund. Do you think that NSE Investor Protection Fund will be able to take care of at least some of the orders which were there in the system before the snag?
See, the fact that markets resume trading and it seems, or the exchange has tried to project that it's business as normal. I don't think any loss borne by traders, investors, arbitrageurs would be borne by the exchange or the IPF. I have my serious doubts on that. But I think again, it's time for markets to do some soul searching and underscore the importance of having two equally strong exchanges, that if one infrastructure fails, that the other can take. And I think this has been a wake up call for market participants, and I'm sure market participants will feel the need to also ensure that they place their orders equally on two exchanges.
Yeah, fair point. Dina, this thing that happened on a day where you had SEBI changes as well in derivative calls for P-notes. Do you think it happened because of overload perhaps from that end? Or do you think this was just a pure technical glitch?
No, I don't think so. This is not a problem which is relating to volumes, because always, there have been some news or the other. There are large amount of volumes which are there in exchange, and I am sure the exchange systems are perfectly capable of handling. So I think it's not so much of a volume issue, it is more to do, means volume is called a sizing issue, but I think there seems to be some malfunctioning of the software because the way the rates were displayed, I think some malfunction of the software was happening, which put the whole system into a tizzy.
Alok, let's get closing comments and then we'll move to the markets after that. What's happened with NSE today is unfortunate, but in terms of a systemic risk, there is none whatsoever. Technical problems, Alok, can happen even with best of the exchanges, and there is a long history which even you know, which I can again share with you, where even best of the exchanges like NASDAQ, FTSE and even Dow, they've got stalled because of technical issues. So can we say that like today was a bad day and it's time to move on?
Bad day and move on, certainly we should. Like I said, certain systemic issues need to be addressed. The lopsided nature of our markets need to be addressed. We need two strong exchanges. We need interoperability of clearing corporations where margins can be made fungible, capital can be made fungible. I think these will address such systemic risks, because today we are living in a very uncertain world where there are malware attacks, where there's ransomware going around, and where wars of tomorrow are probably going to be conducted by sabotaging systems of other countries on the bourses. So taking all this into account is extremely important for us. I think we should take this as a wake-up call and move ahead.
Okay, Dina, just closing comments from you as well. In the morning, there was a worry about trades and how things are going to happen. Do you think now most of it is behind now and most of it was resolved in the second half? Because when trading actually resumed at 12:30 and we were speaking with some dealers, they said the trade punches were still a little bit slow.
Yes, they are now behind, because had this communication constantly been available from NSE, then I would say that there would not be so much panic among the investors, and though one exchange is not functioning, it would not it would be maybe not business as usual, but as near to business as usual as possible.
Okay, Dina, Alok, thank you both for joining us and thank you for your quick take. Well, on a day when NSE was not trading for 3 hours, so markets effectively only traded from, let's say, 12:30 to about 3:30, that's 3 hours. And in 3 hours, the Nifty really did something special. 100-point uptick on the Nifty, and there was a bout of short covering and big bounce in TCS and the likes of Bharti. So where do we go from here? I mean, tomorrow NSE snag is going to be a forgotten story. Traders will look at the new Nifty rate and they'll also move on. So let's talk markets. Sudeep Bandyopadhyay and in-house market expert Manoj Jaiswal, they both join us. Evening to both of you gentlemen. Thank you for joining us. Okay, Sudeep, all-time high on the Nifty, and it has come on back of stocks where gains were not expected. TCS, Bharti, and a lot of PSU banks.
Nikunj, I think I'll not put too much on this because of the SEBI circular regarding P notes. There was a lot of short covering. We did see a lot of down and out stocks going up significantly. You mentioned some names. You can talk about Arcom, you can talk about Just Dial, and counters like that also shot up. It was predominantly short covering. Yes, market is in a good trajectory. There is enough and more liquidity, but I think today's increase you can put to a great extent on account of short covering. So yes, tomorrow markets may move on from here and move on in the positive territory, but today's rise I will put it down to short covering.
Manas, hi, evening. Now that we've managed to finish off at a life high, do you sense that momentum and mojo is really back after last week's gain of about 1.5%, and tomorrow perhaps we would be celebrating 9,800?
Yes, the possibility is very high that Nifty can touch 9,800 or it can cross 9,800 tomorrow. Because for me, this is a clear breakout. Yes, volumes are not there because of that technical glitch. But that price pattern suggests a clear breakout on the charts, and after this breakout, you can set the target of around 99.70, 99.80. However, for next 1 or 2 trading sessions, I think you can see the price of 98.40, 98.50 on Nifty. So I think even at current levels, one can take a long call. You can keep the stop loss below 96.50, and you can take a long call. And because of today's technical glitch, many traders could not participate on such an important day when Nifty gave a breakout of 9700, because most of the traders were waiting for this breakout for last 1 month. And when it came, most of them could not participate. So this is a big loss as a trader.
Okay, Manas, as well as Sudeep, gentlemen, stay with us. Lots more to chat about. There was lots that was happening in the market. We had a new listing as well today. So we'll take note of all of that, but after this very quick break.
Because well, it's ironical on a day when there was a 3-hour blackout on Nifty, for the Nifty, and there was no trade between 9:15 to about 12:30. Nifty touched a record high. It could be a function of short covering, or is this an indication that markets have finally managed to break out of this glass ceiling of 9,500 to 9,700? So when markets start going higher, nobody talks about the cause. We look at the direction. And directionally, markets have closed higher today. And if there's a little bit of follow-up buying also, I mean, who cares whether it is short covering or whether this is fresh commitment? Markets are going higher and let's participate.
I agree with you, Nikunj. I mean, though I mentioned that today's market increase was predominantly on the back of short covering, your logic is absolutely right. And I mentioned that tomorrow morning markets may move up even higher from current levels. Let's not forget the fact that there is a significant amount of liquidity waiting to be deployed. And I think there is also a feeling among a lot of investors who have lost out. We have seen that getting played out in some counters like Reliance, where there has been fresh bouts of buying even at higher levels. And we are nearing the result season. So again, based on the results, I think there can be fresh amount of buying in the counters where there are good performance. So overall, I think we are in a good phase. We'll have to see how the monsoon pans out over the next few weeks. We'll have to also wait for the the GST, the first month of GST, and how the returns are going, how the things are happening smoothly, how things are falling in place. So barring these 2-3 small things, I think overall we are in a good trajectory, and market should continue with a positive bias.
Okay.
Manas, if one has to analyze what really aided the move today, and one can safely say it was IT, it was pharma, and it was PSU banks. They were really the leaders of today's move. What do you think is going to dominate trade? Would pharma continue its up move? Will IT continue to hold out ahead of some critical earnings like TCS and Nifty? Or do you think PSU banks is where the market can find comfort?
So I think the most important thing is Nifty IT index has given a reversal sign, because IT index has broken the resistance of 10,200, 10,300. It closed above 50-day and 100-day moving average. Oscillators are showing positive crossover. So here definitely one can see more upside. The possible target for this Nifty IT index comes near to 10,700, 10,800. So I think you should keep a close watch on some IT stocks, especially TCS and Wipro. I think these two counters can give around 5 to 7% up move from current levels. Yes, PSU banking stocks are looking strong, especially PNB, Oriental Bank, and Bank of Baroda. These three stocks can give around 7 to 8% up move from current levels. So I think these two sectors, PSU banking and IT index, can lead the market now.
Okay. Tomorrow we will also get numbers from IndusInd Bank, so that in a sense will kickstart the earnings season. But the listing of the day today has to be AU Small Bank Finance. Now, Uttam Tibriwal, we spoke to him a little earlier or immediately after the listing, and he feels that there is every reason to believe that the previous growth in coming years will not get challenged.
And going forward also, I'll keep our focus to these hinterlands, villages, financial inclusions, those people who are not access to formal credit, They do have an income, they do have an intention, but they don't have access to formal credit because banks doesn't lend them. So I was able to cater one segment of customer only. Now I'm exposed to all kind of customers, you know, the whole gamut of customers open to me. So I think growth for AU per se, going forward also, I don't see any challenge. I think we'll surprise the market going forward. Quarter to quarter we'll give you a report. Compromising on growth, I can say that maybe 1 or 2 years here and there because we're transforming ourselves. We built a huge infra, we have built a huge IT, best of the ITs of the world. So give you the best experience, customer experience to the market.
Welcome tomorrow, and we would be discussing earnings as well officially, and kickstart with IndusInd Bank. That's slated to come out with its first quarter numbers. So my colleague Tanya joins in to tell us what to expect from IndusInd Bank tomorrow. Tanya?
Well, IndusInd Bank is expected to come out with earnings tomorrow, and we're expecting a pretty steady set of numbers from the company. In fact, the NII is close to somewhere around 1,720 odd crores, a growth of 26 odd percent. On the bottom line as well, we're expecting a growth of almost 26%, where we pegged the PAT to come in at about 835 crores. The margins as well as asset quality is expected to remain largely stable on a quarter-on-quarter basis for the company. In fact, in terms of asset quality, specifically its provisions, we're expecting a decline on a quarter-on-quarter basis. Because in Q4 FY17, the company took a 122 crore one-off provision on back of JP Associates exposure, and given the deal with Ultratech has gone through, that exposure, particular NPA is expected to upgrade into a standard asset. So that is one reason why provisions will decline on a quarter-on-quarter basis and help profitability further. On the loan growth front, we're expecting about 22 to 25% kind of loan growth, for the company. In the deposits front, we're expecting good growth of about 28 to 30% on a year-on-year basis. So what is it that we're watching out in terms of management commentary? Well, the strategy for its 3 years, its outlook on NPAs, as well as the trends that they're seeing in the MFI and SME book. Watch out for management commentary on ET Now's story of its possible buyout of Bharat Financial. Lastly, watch out for the trends in NIMs as well as the quantum of CASA that the company retains. And finally, the traction in the non-vehicle consumer portfolio.
Sudeep, what do you expect to hear from IndusInd Bank tomorrow?
Well, Nikunj, IndusInd Bank has been beating market expectation quarter on quarter for as long as I can remember. The top class management, fantastic performance. And we continue to expect a repeat of the same. It'll be interesting to hear management commentary, if at all anything, on their proposed acquisition of Bharat Financial. The banks all around them have been acquiring microfinance companies and increasing their penetration in that particular segment. IndusInd has been rumored to be doing it for quite some time, but deal hasn't yet materialized. If a deal happens, one has to see at the valuation at which they are doing the acquisition. Bharat Financial is a large organization also. One has to see if that comes. Of course, we'll also keep watching the asset quality. IndusInd has done a commendable job of keeping its loan book much better shape than many other banks, and we believe they'll continue the same.
Yeah, IndusInd Bank is going to be in focus as it's slated to come out with its earnings tomorrow. Manas, wanted to get your sense on a Nifty Bank trade as well, because that's going to be a little sensitive, after the rally that we've seen in PSBs today, and you've got earnings as well with IndusInd tomorrow.
See, Bank Nifty gave a breakout above 23,400 2 days back, and then that time I gave a target of 23,800. It has already tested 23,800, but pattern is strong because it is clearly making higher tops and higher bottoms, and now the possibility is very high that it can break 23,800 also, and it can test 24,200, 24,300. So I think till Bank Nifty is trading above 50-day moving average, any correction is a good buying opportunity. Now the 50-day moving average plays near to 23,100. So keep your stop loss below that, and you can take a long position on any correction.
Okay, let's take a break, and here are some thoughts from Srinivas Rao of HDFC. He believes that in the medium term or in the short term, markets are fully priced, but if you are a long haul guy, you should look at themes like defense, private banks, and this entire GST theme where unorganized sector will become organized sector.
The next cycle, we believe, would be led more by a spending. So we are, as I said, one is the stocks linked to capex. Second is corporate banks, and third is companies that will benefit from this GST. As a result of this GST, we think share of organized would see good increase in the coming 1-2 years versus at the cost of an organized sector. I think these are the three themes where one can expect a reasonable earnings growth. I am saying it is not for 1 year. I think if the GDP economy grows at 7-8%, and there is no reason to believe that corporates will not grow at 12-13% in their top line, and in that scenario 14-15% earnings growth is, I think, very much a realistic number. MNC capital good companies, I think, where we've seen a significant run up in stock price and PEs are very, very high. So there maybe returns in the near term could be slightly lower. But at the same time, I think within the infra capital goods space, there are quite a few companies trading at 15 times, 14 times 1 year forward. So I think there are enough opportunities in markets, but I think one need to exercise caution.
The final turning point, I think, was the comfort level of the states.
We have shown that you can get cooperative federalism in India.
India stands united when it comes to developing India.
When you reduce the hassles of doing business, entrepreneurship takes over.
Our aim towards simplification of any kind can only have a positive impact.
Once the states realize that there's a lot more buoyancy because of this compliance,
we want to launch the car in India, which will be made in India.
Every reform or every change is invited with wrath.
GST is a revolutionary step.
In 12 to 18 months, the very tangible benefits of GST will become apparent.
Back on ET now, right here, and we are still analyzing the NSE technical snag that went on, and it went on. First one would have thought that this is just going to be a 5 to 10 minute technical glitch, but a good 3 hours. That's how long the market was shut, and the National Stock Exchange today was trying to figure out this technical snag. So 12:30 is when the market trading actually began for the National Stock Exchange. Up until then, it was all a BSE show. But 3 hours, and the markets managed to make up for all the lost time. We've had a comfortable close above the 97.50 mark. We've made another record high for both the Sensex as well as the Nifty as well. And the broader markets as well were into a comfortable breath is what you had at your hands. It was IT, it was Pharma, it was PSU banks. They were really the drivers of this leg of the rally that transpired today. Of course, it has to be said that global cues as well were supportive. When we came into trade, all of Asia was trading with the positive bias. On Friday night, US equities left off to a smooth finish, so about a 1% rally across the board for the Dow, Nasdaq, S&P. That also aided the move for us somewhat. But what else can we look forward to? Remember, this week you'll also have earnings. Tomorrow you have IndusInd Bank, TCS on Thursday, and then Friday you'll have Infi earnings as well. And Sudeep, it has to be noted that there's a smart build-up happening in these IT names. Are these just trading positions ahead of the numbers this week in TCS and Infi, or do you expect anything meaningful to come out of the management commentary, if not the earnings this quarter?
Well, I think it's little too optimistic to expect anything great from the IT companies this quarter. Few facts. Of course, today's rally was on the back of short covering, so we shouldn't put too much weight on that. But apart from that, the US business hasn't been strong. Domestic business hasn't shown any great traction. The currency movement also has been favorable. Companies like TCS has taken the salary hikes in this quarter. So overall, we are not really bullish on IT as far as this quarter is concerned. Having said that, in companies like Infosys, the expectations are so low that you may find that post results it may show a small rally. But otherwise, for the medium to long run, I don't think this quarter results of IT will give us anything to cheer about.
Apart from Nifty and TCS, what else is there on your radar?
Well, I think we are looking at some differentiated IT companies. We look at Persistent Systems, Nikunj. We believe it's a good buy at current level. We also like Mindtree and Emphasis. I think these companies can be looked at current level. We are little skeptical on rest of the IT pack at current levels.
Manas, we briefly touched upon the IT pack and the re-emergence in the IT names. So be it a Mindtree, be it Infi, TCS, Wipro, HCL Technologies, all of them held out. Any trade that you would like to recommend for tomorrow?
See, in IT space, I would like to go along in Wipro because Wipro was trading in a range of 265 and 255 for last, I think, 3-4 weeks, and it was taking support near to 200-day moving average. And today it has given a clear breakout on the charts. Oscillators are showing positive crossover. So I think here definitely one can take a long call, keep the stop loss below 262, and you can set the target of around 280. Other than IT, I would like to go along in PNB also because PNB has broken its 100-day and 50-day moving average with decent volumes, and I think you may see more recovery in PNB. Target comes near to 165. You can take a long call here. Keep the stop loss below 147. And one more thing, that Tata Global, because the stock has given a clear breakout on the long-term chart. Stock was facing a lot of resistance near to 160, 165 for last, I think, 3-4 months. And now stock has given a breakout with great volumes. So here one can take a long call, keep the stop loss below 160, and after this breakout, you can expect the target of around 180.
Okay, Manas, Sudeep, both of you, thank you so much for taking the time out and analyzing really how this NSE blackout panned out, and more importantly, how strong the comeback for the markets was once the NSE resumed trading. That's at 12:30 p.m. today. But with that, we will wind it up in this special edition of the show. It's a goodbye from Nikunj and me. We'll see you with all the market action tomorrow morning at 8 a.m. But as we take a break, or rather, as we wind down the show, hear it out from... we've got Ashish Tawakle joining in with his take on the markets and what should be bought right now.
In pharma, I think we are at the trough of all the problems that can be there. In IT, I wouldn't say we go back to the heady growth rates that we saw of mid-teens or high teens anytime, but close to double digits growth with some help from currency makes that a reasonable play. Yes, but your point is right. I mean, we are kind of a little bit cautious on the expectations that are built into some of the domestic sectors. That's the HFC, NBFC space is one where I think we need to be more cautious than the market is being. The reality is that housing finance tends to be a fairly commoditized business with low returns across the world. Right?
everybody seems to assume there are never losses in the retail space. That's simply not true. There's enough evidence even in the recent past that you have that. And it's a business which typically favors scale, low cost of funding, and delivers commoditized returns. So I think, yes, it's evergreen in the sense that there needs to be a lot of growth, but I think the optimism around the returns is a bit overdone.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.